Hey friends, it's Brad Brain. Hope you're doing well. So I have a couple of days work in Vancouver here, and it's interesting. It seems like I get different questions when I'm working in Vancouver than I do back home. I don't know if maybe that's just coincidence. Maybe the folks back home know me better and know not to ask me the type of questions that sometimes I get in Vancouver. But a lot of it lately has been about some really high flying stocks, right? Things that were here and rocketed way up. Now, people that know me know that I'm a value investor and I'm not interested in hype and speculation, but rather I'm interested in the fundamentals of the business that we're looking at. And importantly, the price that we have to pay to buy into something. And to me, if you are paying an extraordinarily high price, it doesn't matter what the business is. It can make for a lousy investment if you pay the wrong price for it. Right. So we've got this situation right now, it's almost a tale of two markets where we've got things that are flying high and everybody else. And these questions I've been fielding, they're about the stuff that's flying high. I'm far more interested in everything else. Here's why. You probably heard this famous quote from Gretzky. At some point in his career, he was asked the secret to his success. And what he said was he doesn't go where the puck is now, he goes to where the puck is going to be. Right. So if we were to look at stuff that's already gone up that much, that's what's already happened. That's where the puck it's been there already. What Gretzky's looking for is where the puck's going to go next. Okay, so to me, if these investments have already rocketed up that price, that's uninteresting to me. I'm looking for where the puck's going to go next. But there's more to it than just that. And here's the problem. Here's why I think that these things that have rocketed way up are actually fraught with peril. And that is, we've got this disconnection between the fundamentals of the businesses and these prices that they're trading at. These prices are not based on current realities. They're based on hope. They're based on speculation. And in large part, they're based on fear of missing out, where things have been bid up to these super high prices. So I saw something, I don't know the source of this, and I don't know if it's accurate, but, it seems right. So I won't mention the particular stock just because in case my numbers are off. But my gut feeling on this is right. So I will mention it for the purposes of telling the story. One of these high flying stocks, it was calculated that it would need to return 35% for decades to justify the price it's currently trading at, and that's nuts. Right? That doesn't make any sense. To expect 35% growth over a multi-year time frame, like a long time frame too, not just 1 or 2 years, that's asking a lot, right? So here's the problem: is that these high-flying stocks, some of them, they're priced for perfection, and if anything goes sideways, if they miss an earnings quarter, if they, I don't know, if interest rates changes, there's so many things that could change, right? So if you're paying such a high price that there's just no margin of safety in your actions, then that's the type of stuff that there's been terrible destructions of wealth over the years from people that pay too much for their investments. So maybe these businesses are doing exciting things and maybe they do have a good future, but there's a difference between a good business and a good investment. And if you pay the wrong price, even for a good business, it could be a lousy investment. So for me, I'm a value investor guy. I'm looking at things like price earnings ratios. For what I have to pay to buy a business, how much is that business actually making right now? What is there's a lot more to it than that, but to simplify it for the purposes of this video, how much revenue is this business generating? And how much is left over after the business pays its bills? And how much of that am I going to get as the investor? Because if you end up, there's no magic in paying $1,000 for an investment that gives you 10 cents a year. That doesn't make any sense at all. And yet people do these types of exaggerated things with their money without understanding that that's what they're doing. And for that, count me out. I'm far more interested in looking to find a wonderful business and paying a fair price for it than I am with hype and speculation and fear of missing out. Hopefully that makes sense. If there's anything I can do to help you out, please let me know. I'm Brad Brain. Take care. Bye-bye.